4 years ago, I was hopping from strategy to strategy, chasing everything that looked like it works. But once I found a specific strategy, I started catching trades like this, and then this. Most traders ignore the specific level even though it's right in front of them. In this video, I'm breaking down step by step with back-tested and live examples, so let's get into it. Section 1, the foundation. My whole strategy is built around the pre-market high and pre-market low. These are the most two critical levels on the day, and most traders skip them. That's why they lose money. When the market opens at 9:30 a.m. EST, that shaded area on the market, that is the pre-market session. All you do is mark out the pre-market high and then pre-market low. That is your zone. Number 2, the breakouts. Now here's the part what matters. You need to see a breakout above the pre-market high or pre-market low. That's essentially where the real trend starts. Anything inside these two lines, this is where chop lives at. That's why I call it the NTZ, the no trading zone. Section 3, finding the entry. Once we break out the NTZ, either the pre-market high, pre-market low, now you could start hunting for an entry. And this is where most traders get lost. There's a specific candle I look for every single time. I call it the Pac-Man, also known as the engulfing candle. When the trend starts, the first thing I check is the volume. Does the volume match the trend of the direction where it's going? So on a smaller time frame, this usually means there's a small consolidation forming. I'm usually on the 2-minute chart, that's why I say that. And that consolidation often breaks in the direction of the trend. It's the same thing for the upside as well. So what is contained? Contained means that it doesn't break above nor below the previous candle. That's what I mean by contained. So check this out. You see all these candles, they're not breaking neither above nor below the previous candle. This essentially makes the stop loss really tight. That's essentially what you want to see as well. You don't want to stop loss so wide, you're gonna risk losing a lot of money. That's why I like these candles, the contained candles, the Pac-Man candles. So section 5, the confirmation no one talks about. This is the bids and ask. Now here's the part almost no trader teaches: how to confirm the trade. There's something every trader has on their own screen, but mostly nobody pays attention to it. It's called the bids and ask. I'll show you how to turn it on when we go into the back testing. Think of bids and ask like an auction. Bids are what buyers are willing to pay, asks are what sellers expect. So section 6, the bid ask confirmation. If we're pushing towards the upside, you want to see this buyer number get lifted, meaning buyers are stepping up and taking control. Count for 5 seconds while price sits in your zone. So check this out. We're in the zone right here. Count for 5 seconds. If buyers keep getting lifted during those 5 seconds, that's your time to execute. If we're pushing towards the downside, you want to see this buyer number get closer to the seller number. That's breaking. So you want to see the bids and ask break if we're pushing towards the downside, meaning buyers are breaking. Same thing. Count for 5 seconds inside your zone. Once it gets inside your zone, if they keep breaking, you enter right there. Now you understand the structure, the entry, and the confirmation. Let's jump into back-tested examples so you can see exactly how this plays out. Let's move on now. Now I'm going to show you back-tested and live examples of what we talked about in the slideshows. So check this out. What you want to see is a breakout above or below the pre-market areas. So check this out. We broke below now. Now what we need to do is scout for a nice Pac-Man candle. So now we do a search for one. Is this a Pac-Man candle? No, it's not. Nope. Now this is a nice Pac-Man candle. Does the trend look weak? Yes, it does. It looks pretty weak to me right now. So what we could look for, if it breaks below this area, essentially I would look for puts towards the downside. So we're still going based off the stop loss on the previous candle. So essentially I would target a psychological number. So psychological numbers meaning 0.5 cents, so 50 cents to $1 move, like that. Not 100, just a $1 move. So that's basically it. That's essentially what you could target if you don't have any key levels nearby. So essentially I'll show you how to mark our key levels right now. So key levels are basically supply and demand zones of the previous days. So check this out. So what we do is mark out the supply and demand zones. So what we look for is iceberg tips on the 1 hour time frame. So we're currently in the 1 hour time frame. So what we look for is any iceberg tips that we can mark out. So there's one right here. We can mark out this one. We can mark out one right here. We can mark out this one as well, or we could target psychological numbers just if you don't have anything nearby gravitate off of. So now let's go into the candles and go back to the 2-minute time frame. So now what we could do is search for puts towards the downside. Once it gets into the zone, I would count for 5 seconds, and if it breaks below for 5 seconds, I would enter if the bids and asks break. So check this out. This is a live example of this trade that I took in real time. So we want to see in the bids and asks. So bids and asks are basically like an auction again. So in back testing, it doesn't show the bids and asks breaking. I don't know why, but I'm gonna show you a live example. So now you see this. This is the exact same trade. So once it gets to your zone, count for 5 seconds, and you will want to see the bids and asks break. So it just all depends in the zone that you're actually watching. So count, I already passed 2 seconds. Did the bids and asks break? So you want this buyer number to get closer to the seller number right here. Is it getting closer? Yes, yes, I'm pretty sure there is. So 19 and then 12, 13, breaking, it's breaking. That's essentially where I entered at right there. So breaking right there, you just saw 6 and then 7. That's essentially where I entered towards the downside. So I caught this whole play towards the downside. After that, you already done the hard part. All you gotta do now is let your trade ride. So check this beauty out. Absolutely amazing. I'm pretty sure this wasn't like over 100% trade. That's essentially like the basic strategy what you need to do. This is the simplest it could get. A pre-market high or low breakage, and then search for a nice PC candle and a trend, and you can absolutely take the trade. This is the basics. This is simple. Trading is not supposed to be hard. So absolutely beautiful. Look how this trade played out, and we caught this whole move towards the downside, and we exited right at the bottom. So essentially, profit targets are basically where you would take some off. So essentially, I would take some off right here and then target the next level nearby. So this was the next level nearby. Did it even get below even further? I'm pretty sure it didn't. So I had to target some psychological numbers. So check this out. 441.57. So I had to target this last number right here. 441.57. No, 441.5. So absolutely beautiful. So let's move on to the next example. And next example, I'm going to show you a bullish example. So moving on to the next example, this is an example of NVIDIA pushing towards the upside. So it's a bullish setup, bullish PC candle. So let's move on. So now let's mark out just the pre-market high and pre-market low. So check this out. This is our whole zone. So you could also, to make it more simpler, you could also use the Fibonacci's to wait for a nice little break and retest. So check this out. We broke above the pre-market high. Now essentially we found a PC candle. The volume, check out the volume. You always have to look at the volume. Does it match the trend? Look how strong this bullish candle is. So for example, you could also use a Fibonacci for a nice little break and retest instead of the pre-market level. So basically the Fibonacci is mathematical numbers of where the chart might break and retest. I always watch the 0.236 and also 0.382. That's why you see it in red right here. Anything below 0.382, that's essentially the no trade zone. If it pushes past 0.5, I would not trade it anymore. For example, if we found a trade, right, if it pushes past 0.5, that just makes the stop loss so much wider. I wouldn't trade it at all. I don't want to risk that much money on that trade. It already makes the stop loss so much wider, so much more difficult to take a trade towards the upside because that steep pull back. So check this out. So I'm gonna get rid of this. See how it's break and retesting. Now what you want to see is a nice push above the level that you're actually watching. So in this example, we're watching 191.4. So that's basically where we're watching right now. So once it gets into the zone, that's essentially where you could enter towards the upside as long as the bids and asks are getting lifted. So check this out. This is a live example of what you need to see in the bids and ask. So meanwhile we're pushing towards the upside. Check this out. It holds above for 5 seconds. Check this out. 1, 2, 3, 4, and then 5. And if it gets lifted, that's essentially your entry point. As you can see, it got lifted right there. Check this out. Look at the bids and ask. Did it get lifted? Yes, it did, by a couple cents. But that's NVIDIA's bids and ask. So the stop loss, as you can see, got so much wider. That's why I don't like trading PC candles that have such huge wicks. It just makes the stop loss so much wider, but essentially that trade just looks so damn good. That's why I took it. So look at the results. Caught this whole move towards the upside. It wasn't that much, but essentially that was a good trade. I would take that a million times. So initially I took some profit sitting right here at 152. That was our psychological number. So let's move on to the next example. In the next example, I'm going to show you where not to trade. This will be the last example of today. So let's get into it. So moving on to the last example. This example is an example of where not to trade. So let's mark out the pre-market high and pre-market low. So check this out. So mark this whole space out. So we need to see a break above the pre-market high or pre-market low. That's essentially where the real trend starts. So check this out. So let's move on. You see how it's not breaking above nor below the pre-market area? That's essentially bad. So like I tell you guys, that's where the real trend starts once it gets out of this spot. So I hope you learned a lot from this video. As you can see, the whole day we could not break above the pre-market high or pre-market low. So it tried to break above but couldn't break above fully. The pre-market high and pre-market low acts like as a strong resistance level also. So you can see rejections or bounces off that level. That's the most critical level a lot of traders ignore. So use that to your advantage, and I'll see you in the outro. So now that you know what the pre-market high and pre-market low could do for you, I hope you learned a lot from this video. You can follow my social medias down below in the description below. So I'll be coming out with more YouTube videos like this. So stay tuned, subscribe to my YouTube channel, and I'll see you in the next video. Let's get like 20 likes on this video, bro. Let's get it.